Hi, welcome in. This is Daniel Martin with the Wehrly Group. Of course, I have our wonderful founding father here, Patrick Wehrly, with us, the CEO. And we just want to take a few minutes to talk about the State of the Union. What all we have to look forward to. Last year was kind of a bit of a shaky year for us, so at the end, and we're kind of started a little bit hesitant this year. That's why we kind of postponed this a little bit. We want to see how things are really going to move before we could start really giving our opinion of where we think things might go. So, Patrick, with that being said, we did send out an email to everybody that had kind of a fourth quarter review. You want to touch on a few of those things just to point out some of the highlights there for them?
Well, first of all, I like to be called our wonderful chairman. I like that word wonderful, and maybe if you could make a note of that and have me always referred to as wonderful from now on, I would really appreciate that. Thank you very much, Daniel. What we're trying to do today is we're not trying to give you the information that you already have. We're trying to help you to see some things that you might not have understood the way that we are. Recently, we attended a luncheon that was hosted by Blackstone, a pretty good sized company. And it was also attended by Goldman Sachs Bank, one of the largest investment banks in the world. So again, we have information to give you today, but in the financial quarterly, sometimes it's easy to look at the massive profits that were posted by these three different areas last year. But please know that deeper than that, if you look at a deep dive, and Daniel and I were talking about this the other day, what's the outlook for consumer spending? Well, that's important. Because if you're buying stocks and bonds and mutual funds, and we certainly are, we want to know that spending is going to be powerful. Spending, of course, is the gasoline. It's what's driving our economy. So we see very good consumer spending this year. We see an excellent labor market this year. You need to know that in terms of the reopening of the COVID Omicron variant. We also see a business outlook survey that was done, very in-depth. Again, very positive. Business is coming back, people traveling, people eating out, people going back to the way we kind of used to do business. And finally, fiscal policy. Again, very positive. Certainly the interest rates increases probably need to be done, and we know they're coming. It's baked into the market, Daniel.
Exactly. So that kind of wrapped up last year. Again, we had a great year for most folks. We just had a little shake there at the end. Now coming into this year, it started off a little shakier than we had hoped that it would. The good part is it's like you say, the market's going to get a true value, I guess you would say, by starting to raise the interest rates a little bit and start fighting off some of this inflation. I know we're all feeling it. Every time I go to the gas pump, that big old truck, I know all about that inflation. But so the good part is, like just we're talking about this kind of and delaying this was most of that Omicron or COVID stuff is starting to get behind us. A lot of countries and even states within the United States now are relaxing on that, which is going to help the economy get going because people are going to basically be able to get back to work. So besides the good news, what possible surprises do you think we could be looking at in 2022?
Well, thank you for asking. We, of course, identified 10 areas that I think you're going to find quite surprising. By the way, I was also gassing up my truck the other day, and a gentleman came out and offered me a second mortgage on my home if I needed one, which is a pretty attractive interest rate, too, I might add. I didn't take him up on the offer, but I could see why he was concerned. Well, let's get going there and just visit a little bit about these. The combination, now remember, there's many different things happening in the market. Some of them combine well, some of them don't. The combination of strong earnings clashes, we believe, this year with rising interest rates. There's going to be an issue there, resulting in an S&P, according to Blackstone, making no forward progress in 2022. That's a pretty dire look at the market based on it having closed 26%. I mean, they did a poll of young people recently and asked them how much the stock market goes up every year, and they said about 20%. Well, obviously, that's wrong. That's not correct, and that's not normal. But again, Blackstone here is indicating that the market will be flat this year. Our S&P will not go up. So if we have a lot of money that we've gained in the market, those kinds of things, and we'll talk about this in a moment, now might be a time to scoop a little off the top, kind of like that famous Texas gambler, touchies and no touchies,
That's right.
kind of money. So that's important. Again, while the prices of some commodities are going to decline, wages and rents, I mean, think of how significant that is in our economy. Wages and rents are going to continue to rise, and the CPI could create additional inflation from where it is now at 4.5%.
That'd be tough.
I mean, I went in the meat market the other day. I've been in there for a while, and I was staring at the meat and staring at the butcher and staring at the meat. And he finally said, "Haven't been shopping for a while, have you?" I said, "No, sir, I haven't." So again, that was quite a shock that red meat is in that particular issue. But again, Blackstone, many of the larger people that we're talking to, analysts, do not believe that inflation is going to be transitory. And that fundamentally, that is guiding our look at what to own, what to buy, and kind of what you're going to want to be involved with here this year. Again, we all understand the bond market has already begun to respond to this rising inflation threat. Many companies, certainly Goldman Sachs being one of them, believe we'll have treasuries at 2.75% by the end of the year. That would not be good for many investors. Again, this is, we're all kind of at a fork in the road, and we might want to start thinking about going right, maybe instead of going left. And again, we're now looking at 4 to 7 increases this year, as opposed to none, which is, remember, what we were still thinking back in 2021. Again, everybody believes the Omicron variant and whatever new variants they come up with are kind of on the wane. While it's a small problem, by the way, in developed and non-developed or less developed countries, the conditions, we believe, normal conditions, as Daniel mentioned, will be largely restored in the U.S. People, again, will spend 3 to 4 days a week in offices, and again, return to theaters, concerts, and sports events en masse. So that's good.
Go Stroke. Oh, sorry.
Now, something we need to know. China. Chinese policymakers, by the way, are responding to this year to recent turmoil in their terrible, overpriced China property markets by curbing speculative investment. They're just saying, okay, you can't do that anymore. As a result, we believe there's going to be a lot more capital from Chinese households that needs to go somewhere. It needs to be invested. And by the way, several major asset managers are beginning to flourish in China, which will create opportunities for Western companies. So again, that's something, maybe it doesn't affect your exact stock portfolio, but on a macro level, it could be very important going forward. The price of gold, by the way, is also expected to rally by as much as 20% this year. That's
be interesting.
That'd be very, so that, kind of that traditional, hedge of inflation, no one's ever really been able to explain that to me, but that being the case, something to watch and think out about. So again, major oil producing countries, this is very important, very important. Major oil producing countries are concluding that higher oil prices are in fact going to speed up the implementation of alternative energy programs, Okay, that's true, and allowing U.S. shale producers to finally become profitable again. Also true. Here's the problem. These countries have proven that they cannot increase production enough to meet demand. Many of them are not even producing to their current permitted demand level. So the price of West Texas crude is going to confound, we think, moving forward this year, the forward curve and analyst forecasts, and should hit as much as $135, according to Bank of America, or $145 a barrel. Wow. I mean, I may have to get a mortgage on my home to fill up my truck.
I may have to get rid of that big old truck.
Now might be a good time. Now, here's a surprise. You thought we were done with this, but we're not. Suddenly, the nuclear alternative for power generation enters the arena in 2022. Look at France. Google France when you're done with this interview. Enough safety measures have been developed over these many years to defeat concerns and fears about its dangers. And by the way, the incredible viability of nuclear power is now widely acknowledged. A major nuclear site, we believe, will be approved for development in the Midwest of the United States this year. fusion technology emerges as a possible future source of energy. Again, this is BlackRock and Blackstone thinking and talking here, but something to think about when you consider their size. Finally, 2 quick points. ESG, certainly on the radar screen, they believe will involve beyond just corporate policy conversation. Government agencies will develop and enforce new regulatory standards. Certainly this new administration seems very capable of that require or demand public companies in the U.S. to publish information documenting the progress of the various metrics critical in these new regulations. And who's going to step in? The Federal Reserve governors are going to step in and spearhead implementation of stress tests to assess financial institutions' vulnerability to climate change scenarios. So you've got 2 different arms of the government, one creating these tremendous regulations, and of course the other arm stepping in and making sure that they work. So finally, this is the last point we want to make today. In a big setback to the green energy program, the United States finds, as of January and February, they cannot buy or build enough lithium batteries to power the electric vehicles planned for production. Oops, think about that. China, by the way, you probably know this, you may not, controls the lithium market, and as well as markets for cobalt and nickel. Again, all important for battery production, and it opts, we believe, will begin to opt to reserve most of the supply of those commodities to domestic use. So again, nothing that we're saying that's automatic that needs to be done, but I think if you start to look at this from 30,000 feet, I think all of us need to make some changes.
Definitely. Well, on top of that, we still have to add that, we still have this threat of war over there in Russia. We have China backing Russia somewhat as far as giving them the alternative to oil that we've tried to restrict them on and stuff like that. So it looks like we could have a shaky market for 2022 as far as being able to continue to produce the numbers that we've seen in the last few years. So that kind of leads us to, if we're not going to have our clients suggested to have keeping all their money in the market, what can we do? Everybody always wants to know, what else do we have to offer for them? Well, we have numerous products out there that we could kind of suggest. One would be, we have somebody that could put something in an alternative that not only would give them a nice tax-free, which again, our thing around here, tax-free income off of their retirement, but also in case they need of a long-term care rise, we could do that. What other alternatives do you think we have out there that we can offer to them?
Well, I'm always surprised. I guess I should get over this by now, but I'm always surprised that people think stock market or CDs. And there's a whole world of great products and great protocols out there that can produce, again, a very good level of long-term care for those of you that are concerned about that, which should be everybody. On top of that, tax-free income. On top of that, safety, some guarantees. I mean, insurance companies have been guaranteeing and protecting people's lives, properties, homes, cars, dogs, and money for years and years. And we take they're pretty good at it. They really are. So again, when I will be talking to somebody about something, I say, well, I've never heard of that before. My existing advisor didn't mention that to me, or my existing advisor never brought that up. Well, once again, not tooting our own horn, but that's the advantage of working with a truly full-service company. We have an attorney that can talk trusts, we can talk finances, we can talk taxes, and we can do everything really under one roof, and people like that. We get a lot of compliments from that. So these other products, we think, are going to be much more important in 2022 than they have been in previous years.
Exactly. And with the bond market starting to finally move a little bit in the right direction, we still want to have a little bit better bond alternatives, and we can kind of offer those types of things to folks. We just need to know where you'd like to be and what really works for each individual. So make sure you kind of give us a call so we can kind of touch on that. So kind of wrapping things up today, we just want to make you have a pretty good understanding of what we're facing in the future coming toward us. But remember, we don't operate in fear. We want to make sure that you know that. We do not operate in fear around here. We want to operate in the known and give you alternatives to be able to sit down with you. We don't want to necessarily review what you have. We want to strategize with you and make sure that we're working up a good strategy that will go beyond this year and beyond that we can adapt to. So, any final thoughts from you, Patrick?
Well, I think one of the reasons that we all lead, we believe the industry in many areas is because we listen. We lead because we listen. We're interested in sitting down, understanding. I had a gentleman that came in the other day, long story short, and he had wanted to start supporting his church and be supporting a foreign ministry. And he wanted an account that would work that way, that would create a legacy. And we built that for him. Very next client that came in, completely different circumstances, age, asset base, background, all those kinds of things. And we were able to listen to that particular client and get things done. So I can tell you most of our clients are referrals. We're proud of that. It's because we do what we say and we say what we do. And in this particular instance, with looking at maybe some things that you might not have been interested in last year with stimulus, now might be a good time to stop by.
Definitely. So again, thank you for taking a few minutes to listen to this little State of the Union, and we hope to see you or talk to you soon. God bless.